All right, good evening, guys. Count It Tortoise Capital, nightly strategy podcast for Friday night, November 18th, 2022. We'll start with the sniper trade of the day. Cliff, 3 minutes. Yesterday's close. This is the open and close of the first 3 minute bar. Then it closed here, rolled up, and then broke down below. So we get a standard entry short. Standard risk box. I thought about exiting there. I wanted to see the RL10. It held. If you had exited at the first yellow dot, you should get back in at the second yellow dot. And you should no matter what, you should be considering a second position on a violation of all this. Because why not? Standard exit. So let's see here. 1 unit of reward or risk. 1, 2, 3. That's about 4 on this one. The entry here would be 1, 2, so that'd be about 2. If you get both of those, that's 6. If you take this one, you get 1. If you re-enter here, you still get the original 4. If you re-entered here, you might not take that second position, but you should. So you should have been around 4 or 6 R on that one. Re-enter short, scratch, 1 R, and into the close. So about 7. Cliff. All right, shifting. Oh, I'll tell you what. Let's do the traders for today before we get into the weekend reports. I forgot it was Friday. Here's the gap down. If this is the size of your wrist box in Devon, you really can think about getting short right here. Damn it. Yeah, you can think about getting short right here on a hybrid frog, and you get that whole move. Now this short here, I don't like taking a full 1 hour loss on that. When that doesn't work in my favor right away and starts moving up the stock, there's a 1, 2, 3 exit for a half an hour, and then you can be long here, get paid, and then there's 2 kata 2s in a row for about an R a piece. So there was more in Devon, but you need to study the hybrid frog. In Tesla, there's the market open. If that's your standard risk, and your first 3 minute bar is this, yeah, you can get short there instantaneously. You might have even gotten short here. But I like the waiting for the PSAR flip and getting paid on all this. Now, when this leg fails at the dragon and rolls over, that's where you put your second entry. Because you got 1 hour in hand for sure plus momentum, and then you crush that exit for everything. I'd probably get short again on this failure at the RLXD, and then that wouldn't lose money. But still, 2.4 in a scratch gives you 2.4 for the day. Pretty good work. Nolan asks, how do I decide which OR3 to go for? I have two or three symbols that I always trade every day, and all three of them are on a screen. Cliff. Yeah, I don't know what the deal's been this week. We've been getting a lot of disconnects. Don't know. Um, this was a question, XLE or Devon. I look for the biggest gapper on my standard targets, and I prefer a company to an ETF because they're more volatile. So here's huge gap. If that's your standard risk box, there's a hybrid frog entry short with momentum, cover in here, and you make an R. This is a 1, 2, 3 entry at the edge of the dragon as it crosses the VWAP. I'll say again, that's an excellent. Now notice your WMB3. Here's a oversold. There's an uptick. You come to the, so you have an oversold condition. You now wait for the uptick. You get the uptick here. So now that means you take this open bar, and when that violates, there's your WMB3 entry. You crush that. Take the exit here, re-entry here, and you're +3 for the day instead of -2. Standard work. Bitcoin. Here's our, on this failure at the VWAP, you got to be on alert status for that. And then when it breaks, even if it breaks below the dragon and get this short, there it is, and then cover somewhere in here. I would take this one. As soon as that fails, I'm out there. I'm not going to take that much of a loss. I'm going to get short right there and take that play. And here's a, let me show you the 1, 2, 3 exit. Swing low, higher low, that makes it bar 2. That is a higher low and makes a new high over that bar. That's such standard work. With a risk box here, you get a little bit of an extra entry, and plus you don't wait for a full PSAR reversal that caused you to scratch what should have been a winning position, which was 1R in hand. Get paid on this one. Re-entry here gets paid. That's good. All right, so those are three offered targets for today. All right, let's go back to the market. All right, so looking at the, because it's the weekend, we're going to take a look at the RLFF. All right, we're going to try our regression line fractal framework again. So we're looking at the 270 is the long term, the 90, 30, and the 10. The difference between the 10 and the 270 is the difference between the trader's price and the long-term buy and holder's fair value. That's the difference that makes the trade possible. So we're noticing the RL10, that's the blue line, double bottom, caught a 2 entry, started to roll over, but now you notice the price is starting to recover. This is really favorable and has a chance at this key price level to move all the way up to here to 430. That is still in play. And we like the fact that we are through the winter into the spring. There's where summer begins, right here. Summer. Still in, and that was summer, fall, summer, and held north of a rising Red River. This is very favorable. Very favorable. The Red River itself is getting ready to cross the zero line. And that little summer, fall, summer, that's an automatic buy. This is strong. That's from the hybrid trading course. Here's the 30-minute chart with the 10-day look back. Today was a gap up, sell off, and recovered nicely to hold above 396. Still has to get above 402 to be interesting, but for right now, 390 is holding, and the 5-day range was actually low volatility compared to the 10-day range, and we're pushing still pretty near the 30-day high. So that looks pretty good. We can see that on the daily chart and the 30-day look back, there's 20, there's 10, there's 5, and here's today. Right, so you can see how diminished the 5-day volatility is. And closing in the upper third of the 30-day look back, all that's favorable. It closed with a higher low. That's a 1-2, so you could automatically enter a 1-2-3 entry north of 398 on Monday, with reinforcement at above 404. This double bottom, so you got leg 1, a pause, leg 2, a pause, and now if this goes, 412 is in play. All looking pretty good. On the 150, we can see that we're almost back to the midpoint of the 150-day range, which there's your high, there's your low, and price is at about the 40-yard line, 50-yard line. That's looking pretty good. It was a low range day today. So let's take a look at the sectors. 1, 2, 3, 4, 5, 6. There's the S&P at plus 0.45. The Russell was the only one stronger at 0.65. The Qs lagged at basically flat, and that was the break-even point between winners and losers. You had emerging markets gave back 0.6. Treasuries gave back 0.7. So a fairly quiet day altogether. So let's look at the losing positions, or the laggards, if we can call them that. The S&P at 0.45. What was worse, lumber, than a mix of uranium, discretionary, tech, Mexico, agriculture? This was down to 0.05. Then we get into negative territory with Brazil, Bitcoin, and the Aussie dollar, 0.2 and 0.4. Blended commodities and the stack of VIX, oil exploration, clean energy, lithium, ARC innovation, FANGs, ARC genomics, and oil, all the way down to minus 1.5. Weakness in energy is helping to prop up the S&P, so that's giving a boost. Marijuana and Ethereum -7 and -4.5. Tesla down another 1.6. Let's look at individual companies that were weak. Rivian, Coinbase, Squarespace, Robinhood. So the whole financial disruptors crypto junk pile is suffering. Here's our metals. There's Cliff at -2.8. There's U.S. Steel at -0.67. And where was my and Alcoa at -0.13. Semiconductors, we had Texas Instruments and NVIDIA were basically flat. And NVIDIA continues to lag them. That's been the trend all week. So I'm waiting for NVIDIA to turn it around. But meanwhile, you want to exploit the strength in Intel and Texas Instruments. Devon Energy on weakness in the energies, -1.9. To the upside, there wasn't much better than the S&P today. You got the other lumber and biotech, 0.5 and 0.6. Then you have a stack of materials, finance, staples, residential real estate, wheat and precious metals for 1.3. And then the only company that was better, Simon Property Group, commercial real estate, 1.8. So a relatively quiet day. The non-tech leaders were the winners. So it feels to me like, the market has moved into sideways today, and or on the edge of sideways, I should say. This was looking just for a quiet end of the week to rest and recover for the weekend is what it feels like. I'm getting ready for a short week next weekend. All right, let's take a look at the reports. All right, let's. All righty. Dashboard number 1 for the weekend report. Bearish normal, but we're right on the cusp of getting into sideways. The risk Z is still allowing us to think about the long side. Risk on. There was a slight give back in the ETF2 theoretical model. So only 8 of the 10 broad indexes are above their 4-month moving average. It's one weaker than last week. These are the current winners in terms of relative strength. And we've seen these. So blended monthly rebalancing portfolios, a lot more in the buy column now compared to their 4-month moving average. Not much big in the form of big wins. Emerging markets, Asia less Japan, have a little bit of juice. We've seen the globals have had a really good month, and so they were kind of calmed down and stabilizing this week. Not much to choose from or separate out. When we add the 9 XL series sector spiders, you get some juice now from energy, healthcare, industrials, and finance, I should say. So you get a little bit of performance in here. Energy continuing to be an interesting swing play, but it feels like it's topped out to me. I'll be very cautious. Energy's not one I think that you can just swing trade when it's this highly priced, highly valued. ETF 32 adds oil exploration into the mix. And again, that's starting to look like some toppy behavior here. In spite of the really good longer term run, it's starting to feel toppy. Um, Otherwise, no change. In the Dow, some key standouts. Merck has just been en fuego. Walmart has made a nice recovery, and Johnson and Johnson. So that's some of your staples. Um, we'll look at our liquidity report briefly. China and the semis, Brazil, biotech. Um, these are all your tradables. These are, and that's discretionary miners and oil exploration. These are the top 30 ETFs by average daily dollar volume. So they're very, very liquid, and we're interested in the ones that are exceptionally volatile based on ATR percentage. These are the ones that make the best intraday movers, and you want to catch those near turning points so that you can turn a day trade into a swing trade. All right, we're going to shift to the daily. Dashboard 1 from the daily, we're looking at min pains like Walmart, Johnson & Johnson, and Merck. That's the safer money. Metals, Alcoa, and Tesla is still in great shape for short-term trading because they are dramatically oversold compared to the rest of the market. So Tesla, Alcoa, and Intel for that reason. Today had some in the Dow, some large breakouts. I want to respect that with IBM, a stealth tech, Johnson and Johnson, and Merck. Three that are definitely worth looking at. I can remember. I'm so old. I can remember when IBM and Cisco were the tech darlings of the internet age. That's how old that is. In the ETFs, the only breakout to the upside was consumer staples. That's on strength in Walmart and Merck. And you have a handful of auto framers that are worth looking at. We'll see Ken H get some of those in tomorrow night's report. Auto framer and the squeezes, the usual suspects. We want to shift to the snipers. 3 in the S&P 500 in Godzilla mode, and Tesla. It's time. And then in the tactical symbol set, you got Ethereum and VIX in the stealth Godzilla mode with double red. And you can just see how beaten down they both have been. The decrease in volatility for VXX and the meltdown in crypto generically for Ethereum. One-day movers, I really like looking at these. Like Target was strong again today. Double green on the one-day movers is always a sign of continuing interest. Hasbro. In the most quiets, it's been so quiet today in the last few days that there's no green whatsoever on there. There's no divergence. And even a lot of the most volatile ones in the green on the 5-day, see how many are in the red. So the market is quieting down now that the election is over and the results are trickling in. And there's more gridlock coming. Just think about how miserable the news cycle for the next 2 years is going to be with Jim Jordan, the Republicans, smearing Hunter Biden, properly so, but man, is that going to be ugly. They're going to make the Trump witch hunt look like the amateur hour. All right, there's our sniper auto framers. Here's our stats for the tactical set. We're seeing in the MACD histogram 4 seasons being dominated by summer and the fall. So any of these that are in the fall that reverse to back to the upside, that's an automatic buy on those. So this is a market that has really healed a lot. Only Latin America and Brazil in the winter on the ETFs. And that's everything I want to cover for today. We will see Ken H. and the Swingers, Swing Traders tomorrow. Saturday morning story exchange at 8:30 Central, the usual time and place. And then Creativity 202 on Sunday morning. And we shall see you then. Take good care.